Hello, everyone. What's up? And welcome back to the Capital Stack, the show where we talk about the ins and outs of apartment syndication investments from all sides of the deal. So there are a few occupations that, in my opinion, tend to build the necessary skill set to do well in the syndication space. So again, this is just my opinion, but I think that CPAs, attorneys, and engineers do really well in this business. Now, I say that primarily because attention to detail and having an analytical mind are two things that all but guarantee a high level of performance as an operator. Well, today we have someone who has two of those three areas covered. Our guest today is Jade Laye. Jade is a multifamily syndicator and lawyer who assists everyday investors and high net worth individuals in obtaining financial independence through targeted acquisitions of apartment buildings. He has over 12 years experience in the acquisition, rehabilitation, and operation of more than 3,000 single family and multifamily rental units in Texas, Arkansas, Memphis, Tennessee, and Atlanta. So some of the major markets in the Sun Belt. Jade has over 280 million in real estate assets under control and or ownership, along with 15 plus years legal and management experience in major law firms. So in addition to multiple law degrees, he holds a BS in electrical engineering. So it's not every day that you get to meet someone bold enough to get a double E and a JD degree. So he has my respect. So with that, welcome to the show, Jade. Very happy to have you here. Happy to share your story and your mission with the world. So why don't you tell us a little bit about yourself?
Happy to be here, Brandon, and thank you for the opportunity. I guess I can just start with my story and sort of how I got here. I'm from a relatively small town in Arkansas, West Memphis, Arkansas. It's just outside of Memphis, Tennessee. Grew up there, the child of a Baptist minister and a high school science teacher. And so grew up with very humble beginnings. But, my father always taught me that with hard work and faith in God, that I could go anywhere in life, be and do anything within God's will for my life. And so I believe that. And so from there, I grew up, went off to school there in Arkansas, did my undergraduate studies at University of Arkansas. And then from there, went on to law school and spent some time on the East Coast working at the Patent and Trademark Office. And then I took a job with the law firm in Houston, Texas, and I got married to my college sweetheart, and we moved to Houston. That's probably been 16 years ago, and been here ever since. So about 3 years after I got to Houston, and I was maybe a fourth year attorney at the time. That was around the time that I was introduced to real estate. And that started the journey.
Oh, that's incredible. Appreciate you sharing some of that backstory. And I tell you what, Jade, you and I have some things in common. So my parents are also ministers, Baptist ministers, and I married my college sweetheart as well. So we went to Howard University in DC, and we met some time ago. I'll leave it there, and we're married now and have two daughters and one on the way. So yeah, a whole lot in common there, and I agree fully and wholeheartedly with you that hard work and faith in God, that's the formula right there.
Absolutely.
So you said that in Houston, that's kind of where you got your start. And if you don't mind, kind of just share what triggered that for you, or who did you meet, or maybe what did you see that said, okay, I need to go down this path?
Well, it was actually a confluence of things all around the same time. I'm a man of faith, and so I understand everybody doesn't believe in God, but hey, that's my story, my belief. So around that time, let's say I was probably a third year attorney. My wife and I wanted to move. Okay, and so we put our house on the market, but this was around the time, 2008, 2009, when the housing market started getting bad. So in between the time we put our house on the contract to sell, we then went and put under contract a new house that was being built. Okay, and so we're going along in the closing process to close on the sale of our old house. A week prior to closing, the guy that was buying that house backed out because by that time, I mean, the bottom of the housing market had fell out, and the guy looked and said, "Hey, the house isn't worth what I'm paying. So, hey guys, I don't want to close," which I could completely understand. Well, at that time, it was like, okay, either I have to carry two mortgages or, I have to find something to do with this house. And so my real estate agent at that time said, well, have you ever considered being a landlord? And I said, man, absolutely not. All I've ever heard was the horror stories, tenants, taxes, and toilets. And I just said, I don't want any part of that. And my agent at the time was like, well, Mr. Laye, I really don't think you have a choice here, which, I didn't. And so my journey, I started out as a reluctant landlord. Okay, so I was actually forced into it. And so I got a tenant in there, and I mean, it was a very pleasant experience. Okay, I mean, they paid on time, they took care of the property. I mean, it was no issues at all. And, I said, wow, okay, well, what if I actually started buying these houses as investments and instead of, making maybe $50 a month cash flow, which is what I was making on that house, I said, well, what if I can make, $500 a month? Also around that time, as my father introduced me to a little purple book, which I'm sure that you read.
Yep.
So, my father, he's been my mentor, my spiritual mentor. And I mean, my biggest cheerleader. I mean, my entire life, everything I've done has been because my father has really encouraged me to do it as far as, engineering school, law school. I mean, I wouldn't have done any of that stuff had he not encouraged me to do it. And so here he was again. And, I say, all right, Dad, I mean, I'm a busy lawyer. I'm a young associate. I'm billing a lot of hours. I really don't have time to read a book. But he kept pushing it. Son, if I had this book when I was your age, wow. I mean, I could have done so much. And so I said, okay, I'll read the book. And I read it, and I will tell you, it blew my mind. It just expanded my thinking. And I saw a view of the world that I had never seen previously. And basically, after I read that book, I said, wow, okay, so this is how they've been building wealth all along. And I just never knew. And that was when I was like, man, now that I know, oh, it's a totally different game now. So I know, so I have to find a way to do this. And so, and that really started my journey. And so all that happened around the same time, which I believe was just God's timing. And, I like to say all the time, I don't know if I ever write a book, but if I do, one book I would like to write, I would entitle it The Two Books My Father Gave Me. There'll be the Bible and Rich Dad, Poor Dad. And those two books, they changed my life. And so that was really what kickstarted. Okay, so after that, it was just all, mechanics of, okay, well, how do I learn to do this? And so I spent about a year and a half and got educated. I mean, I read every book I could on, real estate. At that time, I was just thinking about buying houses. So I read every book I could about foreclosures, being a landlord, the different types of loans. I mean, all of that. And then I also joined a group here in Houston that educates people on how to become landlords. And so I got around some seasoned investors that own, tens or hundreds of houses, and just figured out how they did it. And so once I got that education, my wife and I, we got out there and started buying houses. And so from there, I started out buying in Houston, and then we expanded into Arkansas, Memphis, I built a real estate company. I have a small team there in the Memphis area, and they manage, all of our houses there, which, we still have a pretty large portfolio there of houses. And so that was where it started. Okay. And then around 2015, I said, well, houses are great, but if there is a way to scale faster, because at that time I was just buying houses like all the time. And so I was all like every month I was buying a house, and after years of that, it gets to where, man, I mean, if there's a way to do more with less work, let's figure that out. And so that's what led me into apartments. And basically I just repeated, the same steps. I said, okay, well, let's figure out how to do it. So again, I joined a group, got around people that own hundreds, thousands of apartment units, and learned how to do it. And then I started putting my own deals together back in 2018. So from like 2015 to 2018, I was either investing in apartments passively, or I was just learning. And then because I always knew ultimately I wanted to be a sponsor or a lead sponsor. And, we're the guys that find the deals and put them together and manage them for our investors. And so I started that in 2018. And, and since then, God has opened a lot of the doors, and I've had opportunity to have a certain amount of success in the business. And so, yeah, that's what I do now, is that, my team and I, we buy these apartments in some major markets around the country, and we've been fortunate enough to do well for our investors. And so
that's incredible. Yeah, again, really appreciate you sharing it. And so there's some things to dig into in that story. One of the things that I really like about your journey is that it shows this progression. So I'm sure you've seen in the past as well, where maybe someone comes up that just had kind of a quick, immediate jump right into the multifamily, or at least they say they had just get nice smooth transition right into the multifamily, and didn't experience anything else, didn't have any kind of journey where where they got to experience kind of the ups and downs, or start off in single family and then get to larger and larger deals to where they're now comfortable. But I like that you had that progression. And so really the point that I'm making here is also for the listeners, you don't have to be intimidated, I'll say, by someone who maybe appeared to have kind of an overnight, when their first deal was a 500 unit or something crazy. It's about building on your experiences, building on different things that you can pull from this business to eventually sort of assemble this expertise that you now have, Jade. And so one thing that I'd like to get your thoughts on, because you still invest in the single family side as well, correct?
Yes.
And so I started off on single family, and I really think that it's still multifamily is obviously, I believe, a greater way to scale. But I think there's definitely a lot of flexibility, a lot of things on the single family side that still makes sense. And so could you kind of talk about maybe the differences between single family and multifamily?
Sure, absolutely. And also just quickly on the comment that you previously made, I echo that. Don't look at what other people are doing, because honestly, 5 years ago, if I met a guy like me, I would have been like, wow, man, I mean, that's just so far out, no, just what I did then is the same thing I would tell anyone now. Focus on your first deal. Okay, the first deal I did was a 48 unit deal. Okay, I've done 200, 300 units, 1,000 units, but I couldn't see any of that back then. So just focus on that first step, getting that done. And if you just take step after step, eventually you will look up and say, wow, look at what I've been able to accomplish. So but on the topic of the differences between single, well, yes. So the major difference is just how single family is valued versus multifamily. Okay. In multifamily, you can force the appreciation in multifamily. And I don't have time to go into all the details about how that's done, but just suffice it to say that the way multifamily is valued is off of the net operating income, or what we call NOI. And basically all that means is that you take your income minus your expenses, okay, everything except your debt payment, okay, and then that net income, that's what's used to value the apartment. And what that basically means is that at any time, if you own an apartment, if you can find a way to increase your net income, either by increasing income, decreasing expenses, or doing both, then that increases your net income, which also increases the value of your building. Now, with houses, you can't do that. Okay, with houses, there's really very limited ways to force the value up in a house. Okay, it's still going to be based on comps in that area. So even if you go in there and you just upgrade everything, I mean, marble floors, marble walls, I mean, it's only so much you can sell that house for, just based on the area that it's in and the comps. So sometimes people ask me, why am I still bullish on apartments based on where we're currently at in the cycle now when prices are high? Well, the reason why is because if you're smart and if you buy in the right areas, I know I can still force the appreciation up, the value up in an apartment in a way that I can in a house. So my approach now is that, yes, I still buy houses, but I'm very opportunistic when it comes to buying a house. Okay, I have to buy a house, me personally, on a discount. Okay, and so the more of a discount I can get, the better. But with an apartment, okay, I don't necessarily have to buy it on a discount, but I have to buy it at a fair price where I know I can take it from here up to here and then increase that net operating income. And then ultimately 3 to 5 years out, that's what's going to drive the returns for me and my investors.
Yeah, thank you. Yeah, that's key right there, right? Is that the valuation method is different, the exit strategies are different, and the type of flexibility is different. So it's, you hit it right on the head. You don't necessarily have to buy at a discount, but you need to have a view of where you can force appreciation. I think that's one thing that I will say, in kind of making the mindset shift from the single family to the multifamily side. That concept is something that I see people struggle with a little bit, because you try to apply the same. Okay, I'm on the single family side, and I have to buy it at a discount, versus on the multifamily, it's not necessarily at a discount. It has to be properly valued for sure, but it's not necessarily at a discount to list or at a discount to the whisper or whatever the case may be. So really appreciate you sharing that. And I would advise, for anyone who is looking to get into this space, use all the tools that you have, which is, Jade, clearly that's what you've done, is to continue to use the various tools that you have and the various vehicles that will get you to that financial freedom and time freedom. So I think those are very powerful things there. So a couple of the things that you dug into that I'd like to speak on. One is the power of ecosystem. So I talk about that a lot on the show, and you mentioned that twice already. One is that you plugged into a single family ecosystem in Houston, but you also got into the multifamily ecosystem that now got you to where you are now. And just want to get your thoughts on the impact that has had on your journey as an investor, getting into the right ecosystem around the right people who are doing what you wanted to do at the time. And then, of course, now you're at that level.
Absolutely, Brandon. I mean, that's a great point that you bring up. Um, your network. I mean, without sounding cliche, I'm not going to say your network is your
You can
network and
say
all that,
it.
but there's a lot of truth to that. In that, if you want to do something, get around people that are already successfully doing it. You don't have to reinvent the wheel. Okay. And so, absolutely, man. I mean, I can't say enough about it. With houses, well, with everything, that would allow you to get to your goals a lot faster. It shortens the learning curve. You'll avoid a lot of mistakes that you would have made along the way, just trying to figure everything out. Me, hey, I'm not the smartest guy, and so hey, I need as much help with the learning curve. All right. And one thing I am good at is I can look at a pattern, a model, and I can replicate that. And I can learn from another person's mistakes and the things that they did right and just say, okay, well, that's wrong. I just make sure I won't do that. Okay, that's not a mistake I'll make because I see that doesn't work, or that's something I should do because I see that it does. And so that's absolutely, I agree wholeheartedly, and especially in multifamily, because this is a very capital intensive space. So you have to have capital. You have to have access, or okay, let me say that differently. You either have capital, or you have to have access to the capital. Mm-hmm. So getting around networks of people who can help you get to that capital, that makes all the difference. See, and so a lot of people, when they enter this space, they think, wow, man, it takes millions of dollars to buy apartments now. When I started, I thought, I had to raise $1 million. That was a crazy huge amount of money, right? It's like, wow, to be able to raise $1 million. Well, yeah, but now I've done deals and I've put together teams where we've raised $30 million. Mm-hmm. And when I started, I could have never envisioned how to do that, but getting around people who are already doing it and seeing, oh, okay, so I see how you do this step and then the next step and the next step. That's how you raise $30 million. See, and so, but that's you definitely need that, and I can't stress it enough. You have to get around people that are on the level that you want to be at. And then once you get into that room and you start looking around and seeing, okay, well, now I'm basically the, top of the food chain now. Well, that's when, you need to get into another room where people can take you up to the next level. See?
Yeah. I think that's powerful. That's what they call leveling up. It's, I think those are powerful things there. And, the way I think about it is you have to, I tell people that, you're going to have to pay one way or another. So there are a lot of folks who, as soon as you mention getting plugged into an ecosystem, and then if you tell them, hey, look, this is an ecosystem that's not free. Some people get upset. And I have my thoughts on, if the value, the folks need to pay attention to the value that they're getting from an ecosystem more than what's the upfront cost. Because again, in this business, you will pay one way or the other. You have to make the decision: do I want to pay on the front end, or do I want to go out there on my own and then risk getting into a deal where I'm way over my head, and then I have to pay such a high price that I'm almost out of the game. Some people, when they get they take those hits, and then for some of them they don't come back. So it's just a decision. And another thing I can guarantee that any ecosystem that you get into, almost whatever the price is up front, will be significantly lower than the damage the financial damage that can come from making some of these mistakes without having the guidance needed. So that's how I look at it. And I think that it just, to me, is just a powerful thing. In addition to the friendships, the relationships, being able to make the connections that typically come from these kinds of spaces. I know for me, one of the things that was a mindset shift is being around people who have an abundance mindset, because that's in my experience, that's not something that's easy to come by. You tend to encounter more people who have a scarcity mindset and who believe that competition is the key as opposed to collaboration. And as opposed to really coming together for a common cause. So it just, to me, I think is such a powerful concept there.
Absolutely.
Yeah.
Absolutely, Brandon. I don't know if you want to stay here or move on, but yeah, I can talk.
Well, we can stay here for a little while. Why not?
The abundance mentality is absolutely, man. And I enjoy being around people that have an abundance mentality. And at every level, I find you will come into contact with people that still have a scarcity mindset, no matter what level that you're on. But the people I like to associate with are people with an abundance mindset. I believe what God has for Jade, I'm going to have that. Regardless of what you do, anybody else does, I'm going to have that. He's going to make sure, as long as I'm doing what he wants me to do, he's going to make sure I have everything he intends for me to have. So I always approach it from, hey, what can I do to help you? Hey, man, I would give you my lenders, my broker contacts. I mean, listen, it's no secret list or anything in this game. Hey, man, I'll give you everything I got, man. Hey, because I believe that'll ultimately come back to me. And also, I believe that's part of what's helped me to scale the way that I have in this business, is because I'm fine with collaborating with other sponsors out there. And hey, let's team up to take down this large deal. That, hey, now, yes, I'm not gonna take down $100 million deal on my own. Okay. I'm gonna call other people like you and other sponsors that I know who we share the same the word that I'm looking for, the same characteristics. We view deals in the same way. We want to take care of our investors, all that. We have the same mindset in that way. Those are the people I want to partner with to say, man, it's enough opportunity out here to go around. Everyone can benefit. It can be a win-win for everyone. So definitely. And then on the topic of paying, yes, you're going to have to pay in apartments. The important thing is to join a group where you're going to get the benefit out of it that you expect, which is why I've only joined a few real estate groups in my life, but it's all been through referrals of people that I know, like, and trust. And I ask them, hey, what do you think I should do? If they're already doing what I want to do, those are the people. I just don't go out there and blindly just say, oh yeah, this looks good, so I'm going to join.
Mm-hmm. Yeah. I think that's important. It's to me, that's really the basis, I think, of joining a group is are they where I want to be, or at least are there some people that I've identified in this group that is operating and performing at a level that I want to perform at. Because you certainly don't want to join a group where you're already at the top and you already look around, you're the smartest person in the room. That's the wrong room to go into. So I just agree with that wholeheartedly there. And so, Jade, I wanted to get your thoughts, because I'm with you. I could talk about this forever, because this is a topic that I believe that is fundamental to success in this business, or really in any business. Is having an abundance mindset. But I did want to get your thoughts on something. So you're the first legal professional that I've interviewed on the show, right? So this is a good opportunity to have or to get some input on the legal documentation or syndication documentation. So passive investors, as you know, passive investors have to sign what's called a private placement memorandum before wiring funds to be a limited partner on a deal. And so I just wanted to get your view, kind of what at a very high level is the general purpose of a PPM.
Sure. Well, the general purpose of a PPM is basically comes down to disclosure. Okay, basically what a PPM is basically a scary document that just talks about all the bad things that can happen in a syndication, and that at the end of the day, this is an investment. Okay, risks are associated. Okay, it's an investment, not a guarantee. Okay, and which is important that you invest with sponsors that you know, like, and trust. Okay, so my investors invest with me because they know me and they trust me. Okay, because you know, you can get a bad sponsor that buys a good deal and still messes it up. Or you can get a bad deal, but a good sponsor, and he can still find a way to make some money for his investors or her investors. So at the end of the day, what that PPM though, it's just a reminder that, hey, I mean, still, let's keep it straight. This is an investment, it's not a guarantee. And so certain risks are associated with investing in anything. Okay. So that's basically what the PPM tells you.
Okay. Yeah. Really appreciate that. Yeah. It's definitely, like you mentioned, kind of risk, understanding the risks, you know, detailing them, getting all the terms and definitions, the fees, all these things. And actually, so there's one question I have for you that I got the other day. And this is around liquidity. So the question I got from one of my colleagues was, you know, hey, you know, are these liquid? And my response was, well, you know, syndication deals are illiquid. They should be considered that. Now, I know that some, depending on the deal, sometimes they'll have language around withdrawal scenarios and things of that nature. But I think actually the question I got was whether or not there's a secondary market for these. And my response was, well, no, because they're illiquid. But yeah, just what's your take on that? So if I'm a passive investor and I want to get into this, but I want some liquidity from this deal, kind of what's your usual response? Because I'm sure you've probably gotten the same question.
Yes. And my response is just that this is an illiquid investment. If you're investing in a multifamily syndication, okay, like mine, our base case business plan is a 5-year hold. And so your money is illiquid for 5 years. Now, there should be, and the plan is always to pay out distributions, okay? But if I have an investor that calls me and says, hey, Jade, you know, I need to get all my equity back out of the deal, you know, now if I decide to do that like on a personal level to say, well, hey, you know, we're a friend, but legally, as far as our operating agreement documents, no, there's no provision, at least in the deals that I do, for anyone to come and say, hey, I want to get my money back out of the deal.
Okay. You know? Yeah, I appreciate you clarifying that. And I do think that's very important for listeners and passive investors to understand. I think, you know, normally when, at least for me, when my first deal as an LP, I won't say that I was surprised to hear that, because I paid attention to kind of the webinar and the initial conversation around it. So I understood it going in, but that's another reason why, I appreciate you giving your input on what the PPM is and kind of what,
yes, because
I think that's important to read through and understand.
Oh, absolutely. Yes. And of course that is in the PPM documents. So absolutely. If you're investing in something, read the PPM and the operating agreement and all of it. Okay. Because yes, that spells out the rules of engagement. And so that's what you're signing up for. So every investor, they have to sign those documents. And that tells me as a sponsor that yes, they have read and understood. And so, yes, yeah. Absolutely.
Yeah, and I'll say for the listeners, we're not trying to scare you, but that's just what this is, right? It's very serious. The sponsorship team has a fiduciary, duty and responsibility to you. So to passive investors. So I wanted to make that clear. Actually, Jade, so you mentioned know, like, and trust a few times, which I think is super important. And that also kind of is a good transition point to another question I have for you, which is kind of what makes a good, solid sponsorship team that an investor, a passive investor, can know, like, and trust? I mean, aside from obviously the relationship has to be built, but just in terms of the team and how they can execute a business plan, what makes a good sponsorship team?
A couple of things come to mind. One, of course, would be just their character as individuals. Okay, my approach to, if I partner with anyone, that's really the main thing that I'm paying attention to, is character. I mean, what type of person is this? Because I also know, as you know, just a grown individual with some life experience, also being a lawyer, that any legal document, there's holes in it, there's things that you should have included that you didn't think about. So it's always gray areas in contracts and all that stuff. So, because contracts are in place, signed, yes, you need to do that, absolutely. But I want to partner with people where at the end of the day, hey, it doesn't matter what the contract said, what it doesn't say. Are you going to do the right thing? Period. Okay. I don't need a contract to tell me what's the right thing to do. Okay. So my approach is that, hey, when I make a decision in a deal, is to think about it. Hey, okay, if my mother's money, if my mom was an investor in this deal, okay, my mom taught high school for 40 years in the same classroom. She worked very hard for her money, and now she's retired, and actually she's now an investor with me. So, I'll tell you, when mom called and, hey, babe, I'm ready to put some money in the deal, I'm like, whoa, mom, I mean, you guys will be okay. I mean, I'll make sure that you don't need to invest, but if you want to, of course. She's like, no, I want to invest. That just kind of, oh, wow, okay, now my mom's investing with me. And even though I've always felt like I've always treated my investors' money like mine, what I realized was then, well, there's a difference between treating the money like my money or like my mom's money. It's a higher level. See?
That's right.
And so now I like to say, hey, I treat my investors' money like my mom's money. And so at the end of the day, those are the types of people that I want to invest with, because I understand that a lot of things happen on these deals, because at the end of the day, you're dealing with people. And whenever you deal with hundreds of people on a property, it's always issues. It's just a matter of, okay, how do we work through these issues ultimately to get to the end goal everybody's trying to get to, and that's to generate good returns and build wealth for our investors. And so first off, those are the people that I want to make sure that they're in it for the right reasons, and that ultimately they have to choose between themselves or their investors. They're going to choose their investors every time. So character, then of course things like experience, things like, do they play well on a team? Some sponsors don't play well on a team if they're not like the lead guy or gal. Okay, if they're not running everything, then they're not easy to work with. See, so those types of things. I mean, do you play well with others? Are you experienced? Those types of things. But always the driving factor is, hey, what do I think about this individual as a person? What is their integrity? So.
Yeah, I think that's very, very important. I appreciate you, kind of digging into that, because the way you phrase it is actually one of the best ways I've heard it put. Is I don't need a contract to tell me the right thing to do. Now, it needs to be in place, obviously papered up, clear, very clearly laid out. But you're right. It's we have data points all throughout history that tell us that. Even if it's ironclad, you still have folks who will, be quote unquote bad actors. And so it really does come down to, do you know this person? Do you like them? Do you trust them? Do they have integrity? like you said, how good are they in working in a team? You know, what kind of leadership
Mm-hmm.
characteristics do they have? You know, and just and do they have that attention to detail to where they are, you know, they because there is a higher level of, you know, when you start to take on people's capital into a venture, you've immediately stepped up the several rungs on the ladder of kind of just responsibility and things that has to be there. So yeah, I you know, I really think that's important for people to understand, is that how well do you know the person? Do you feel that they're going to operate above board at all times? You know, even when things get a little bit hairy on a deal, and actually, so that's where the experience comes in, because it is good to see. Okay, well, things didn't go so well on this deal. How did this person operate when they encountered this difficulty?
Absolutely.
You know?
I agree. You bring up a very important point. You know, a lot of times when I speak with investors, new investors, you know, they'll ask me, well, most of the times I just automatically tell them, hey, this has been my track record from my worst deal to my best deal. So I always start off on the worst deal.
Mm-hmm.
Okay, because you know, I always want to, part of what I do also is I'm interviewing my potential investor to say, okay, is this a person that I would want to invest with? Because it's a certain type of investor that I don't want to deal with.
Yeah.
See, so but so I mean, in a way, you are kind of trying to scare a certain type of investor away. See, because I want people to understand that, you know, what I do is not a get rich quick. It's you consistently invest over a period of time, and if we do it the way we ought to do it, we will build wealth. It's not a guarantee, okay? But if you're consistent, yes, you can build a lot of wealth in what we do. Every time you're up to bat, it's not going to be a grand slam. There'll be some grand slams, but there'll be some base hits. Okay, so everything is not going to be, you know, man, I doubled my money in 2 years. Well, hey, great if we do, but every deal is not going to be that. So, but you bring up a great point in that you want to know how a person acts in a bad deal. Anybody can get on Facebook, you know, YouTube, and that's one of the reasons some of my investors ask me, Jade, you've done very well for me, but you don't publicize it. Well, no, the majority of my investors now come from referrals. Okay, so hey, if you have invested with me and you're happy, refer a friend. That's how I get most of my investors now. I'm not going to be on Facebook, hey, I just closed a deal and this is what I did. And the reason why is that I think, okay, unless I'm going to do that on every deal, even the ones that say did okay, nothing to brag about. Okay. My worst performing deal over a 3-year period, the deal returned about 35% to my investors. Okay, that's about 11-12% a year average. Which,
still a good deal.
Yeah, it's a good deal, but that's not something I just want to blast out there, right? Because I also have deals that say double money in 3 years, 2.5 years. See, but you have a lot of people in our space that'll get on Facebook and all that, which, I mean, hey, if that's the way that you do business, if that's what you need to do to attract investors, great. But in my mind, unless you're going to do that for every deal, don't do it for any deals, because you're not giving people the complete view of what we do. See, so
yeah, you know what? I think that I feel like that's also sort of the attorney a little bit coming in, because you have that measured kind of view of things, and it's like being careful about what's presented and how accurate the picture is, because that is important. You know what? So, you know, some of those posts that come out, if I'm a potential investor and I see that, the human nature is every time I think about putting capital with this person, that deal is the one that I'm going to look at.
That's the deal you're thinking about. Yeah,
absolutely. And and so I wonder that as well, as kind of, I wonder what the boundaries are, because there are there are a lot of boundaries in this space, and so I wonder, at what point do those boundaries start to get tested, if that is published or put out there as this is what you can expect. That's because that's the risk, is that the message that's being put out? I mean, maybe not, but that's kind of what is that person saying this is what you can expect. So that's sort of where things get, a little gray and difficult. But I'm with you. It's making sure that the accurate picture is put out there, and that people that you're careful with the expectation that's being set.
Right. Manage expectations, and as a sponsor, consult with your SEC attorney before you start posting stuff, because your SEC attorney will keep you out of a lot of trouble. And so, yes, on all of my deals, I always have a good SEC attorney, and and so they advise me as far as, okay, it's okay to do this or that. So, but yes, that is a gray area as far as just posting stuff after you've closed the deal. Yes, I mean, according to my SEC lawyer, that's fine to do. But again, I just think you need to be careful to manage expectation, because the last thing I want to do is attract investors, and they're expecting that all the time, when I know that it doesn't happen all the time.
Yeah. Excellent. So we're getting a little close to close, and so I wanted to ask you a question. I mean, I know that it's a deep topic actually, but and this is around what a limited partner, a passive investor, can expect to see in terms of reports on a deal. So on a monthly basis, or whatever the cadence is, what should they expect to see from a sponsorship team?
Great question. My investors get a monthly report on all the deals. Okay. And then that will also include financials. At a minimum, it will include a T12, and then also a rent roll, which, based on those two things, that really kind of that gives you a good pulse of how the property is operating. And then, beyond that, of course, my investors know they always have access to me, so they can reach me via text, telephone call, anytime if they have any more specific questions about what's going on. But I would say, as a passive investor, you should always have access to your sponsor. And so if you're trying to get your sponsor, they're not returning your calls, they're avoiding you, which some do, that shouldn't be happening. And at the same time, they should be communicating with you on a regular basis, and it should be financial information there in order to back up whatever they're saying is going on currently on the property. So
thank you very much. So yeah, again, for the listeners, that access, if you find that someone's ducking you and dodging you, but you've contributed some capital to the deal, you're an LP on the deal, that's a big no-no, and that's a red flag for sure.
Absolutely.
I know of someone who invested, on one deal. I won't, no names and anything like that, but I'll say that they invested, well over the minimum on a particular deal, and they mentioned that all the way through to the exit, that they hadn't had any frequent communication with that sponsor, and to put it nicely, they didn't invest with that sponsor again. So, but yeah, LPs are partners on the deal. They're essential. You mentioned it yourself earlier that, that with these sizes of deals, there is no deal without the limited partner. And so,
Absolutely.
So in cases where, or in deals where, they go through the close, and then, an LP doesn't hear anything from their sponsor, that just, again, kind of goes to the character issue that we kind of discussed earlier.
And what I like to keep in mind is, accountability. Okay.
Yeah. Mm-hmm.
you as the sponsor, me as the sponsor, I'm accountable to my investors. I'm accountable. And so, I appreciate my investors that they understand that. And so when they need information, they know how to reach out, but they don't abuse it. But at the same time, we understand that, hey, yes, absolutely. If you have a question, concern, if you're like, hey, Jay, I haven't been getting my monthly email. Well, absolutely, reach out. I need to know that. Is there an issue with the email platform that we're using? Is it going to spam? Are you checking it? Did something happen in the email actually not go out? All of that. But at the end of the day, I'm accountable. And so I don't understand being in a deal and the sponsor not communicating with the investors. I don't understand it. So
yeah, and neither do I. So well, look, I really appreciate. Actually, Jay, before we wrap here, let me ask you.
Sure, and I got some extra time too. So
okay. So I want to ask you something. So one thing I like to do each show is to kind of speak directly to listeners, and for someone who's listening, but that is interested in getting into space, and for whatever reason they're hesitant, they're waiting to get in the game, they want to get in, maybe they even have a little bit of knowledge on how to start, but they want an actionable tip, something that can help them get started. So what would you say is an actionable tip that the listeners can take, or someone can take, to get started in the game?
Well, it would depend on when you say get started. Are they getting started
as a passive investor?
As a passive investor,
yeah.
Well, you would want to reach out and to meet people that are already in the space. So if you're listening to this, then of course, Brandon would be a great resource to reach out to take that first step, to reach out and actually speak with people that are already in the space doing it. Me, others like me, I would say that would be the first step. So another tip is to, hey, it's never hurts to get educated. That doesn't mean you have to go out and join some group, but of course, there's plenty of books out there that you can read, but just understand that, you'll get a lot more value out of actually speaking with a person that's doing it versus reading a book. So I would say, but at the end of the day, they all revolve around the point of taking action. You have to do something, okay? Something a step closer to your goal. So whatever that is for you, a phone call, attending a event, a workshop, but you have to take action.
I like that, and I'll tell you what, again, for the listeners, if there is something that you have identified that could potentially help you get to the point where, okay, now I'm ready to invest, but it's something that makes you a little bit uncomfortable. I hate to say it, but that's probably the thing that you need to do, right? So
Absolutely.
Getting uncomfortable is often the first step to just unlocking infinite potential and to, because think about it. So Jade, you mentioned that you started off by plugging into these ecosystems, but if for you said, you know what, I don't want to go there, because I'm sure at that point it was, in person, right? And so it's like, well, right. I don't necessarily want to go. I don't know any of these people, this kind of thing. And so if you let that become a barrier, you might not have gotten to this point when you did.
Absolutely not. Absolutely not. And that's another great point that I could spend a long time talking about. Everything I've ever done that was, a big, that people would look at like, wow, how's this guy done it? It's always been outside my comfort zone. Everything. Everything. And I've learned to live like that, to live outside of my comfort zone.
Mm-hmm.
So, there's a verse in the Bible that speaks about, it says, the just shall live by faith. Mm-hmm. Living by faith. Faith is doing something based on something that you don't see. So it's like you're taking a chance. You don't know if this is going to work. Okay. But it forces you to step out when you're not sure of an outcome. Okay. And so over the years, I've learned what that verse has meant to me is that in order to live my life in the way that God expects me to, I have to live that by faith, which means I'm constantly doing things that, hey, I don't know how this is going to turn out, but I have to have faith that God is going to help me to be a success at it. And so everything I do. So now with, apartments, people may look at me like, oh yeah, this guy now, I mean, the deals he's done, it's just like he can do this in his sleep. It doesn't phase him in. Man, every deal I do, there's a part of me that's scared. Every deal I do. And if I'm looking at a deal and I'm not scared about it, I need to find another deal to do. I need to do a bigger deal. See, because if there's not something in me that's forcing me outside of my comfort zone, it means I'm not growing. So if you want to have that growth, and me, I get very frustrated if I feel like whatever I'm investing energy into is not growing. I want to have growth, and so in my business, yes, I have to be doing something to make me grow, and the only way to do that is to constantly be in an area that's outside of your comfort zone. So you have to get over that. Even going to an event, I'm a very introverted person. I'm fine with being alone most of the time, but I still want to spend time with my wife, kids, family. But if I'm ever in a place where I'm like, wow, I'm alone and nobody's talking to me, I'm absolutely fine with that. And so for me to go into a room with hundreds of people, it's a conscious thing. I have to say, okay, Jay, you're here to meet people and network. So you have to go up and speak to people and engage with people. That's effort for me. I'm not comfortable doing it ever, but I still do it because I know that if I don't do that, I can't grow and do what I'm doing now if I don't expand my network of people. So it all ties together. Great.
Oh yeah. It's all taking action and I like that, live outside your comfort zone. It's just instead of waiting for that fear and anxiety to subside, focusing on maybe managing it and channeling it a little bit, and that's the space to be in, because the truth is, like you just mentioned, so you've been on a deal where you and the team and your team had to raise $30 million in equity. And so that fear and that, like, that concern, that worry is going to be there. But it's just about channeling it, managing it, and then getting to the point where you can deliver, because it will never, it'll never completely go away.
No.
Right. Yeah.
It'll never go. If it does, it hasn't yet. I mean, no. So yes, you're never going to get to a point, at least in my life, I've never gotten to a point where I don't have anxiety. And there's always something to be afraid about. Okay. But another way to put it is, there's always a reason not to do a deal. And there's always a reason to do a deal. So it's always two sides. It's like a coin. It's always two sides to it. And I believe, hey, if you don't think a deal will work, then the deal won't work for you. If you think a deal will work and you have a viable business plan, it will work. And so, I could go on and on, but this isn't the time or place for that. But yeah, man, you have to live outside of your comfort zone. And one of my mentors, he likes to say, believe in the outcomes you desire, okay? And doubt your doubts, okay? So my fears, I look at them, I say, man, I doubt if that even happened. I believe that I will get the outcome that I want to get. And that's worked out great for me thus far in life. So I'm sticking to it, man.
Oh yeah, stick to it. I like that. That's very powerful. No, well, look, hey Jade, look, I really appreciate you being on the show. I just and real quick before how can the listeners get in contact with you, like your socials and email?
Sure. The best way to get me is via email. My email address is jade.laye. That's JADE .laye, LAYE at layeinvestments with an S.com. Send me an email. I'm also on Facebook, LinkedIn. Just look me up, Jade Laye. I'm pretty easy to spot. So,
all right, appreciate that. I'll include the links in the show notes as well.
Correct.
All right. Well, look, Jade, really appreciate it. Appreciate the conversation, and I think the listeners got a lot out of this. So thank you so much for being on the show.
I appreciate the opportunity, Brandon.